Welcome to our channel. The question of the day. I've never had money. I've never known how to save, and I was never financially educated. I also know that having a financial advisor would be helpful, but the ones I've met in the past only tried to sell me insurance. I'm hoping to find good advice or a reliable reference here. Here's my situation. I'm a teacher at the top pay scale. My salary is public, $102,000. I'm currently going through a separation. My ex-partner and I sold a piece of land in August and made a profit, so we'll be taxed on our capital gain. I don't have an RRSP or a TFSA, nothing. What are my options to try to pay as little tax as possible on my capital gain?
Response number 1. Your situation actually seems quite simple. I'm not even sure you really need an accountant, though I also get the impression that you're not sharing your full situation. For example, are you currently renting or do you own a home? You said you have an annual salary of $102,000, yet you've never known how to save or invest, and you've never had money despite that salary, which basically means you might be a bit, or quite, of a big spender. First, you need to start budgeting your lifestyle. I'm not sure an accountant is really the right person for that. An accountant is mainly useful when you have significant tangible or intangible assets, and then they can give you proper advice on how to manage them. But it sounds like you don't have any of that right now. As for the capital gain, I'd focus heavily on RRSPs, especially since in your case you've never contributed to one before. But beyond all that, I think you need to start by creating a budget for your expenses. That's not really a job for a tax specialist or an accountant. And even when it comes to future investments you might consider, if I were you, I'd try to educate myself as much as possible in that area before relying too much on advisors or tax specialists. Because, like in many other fields, there are good ones and bad ones, and if you don't educate yourself, they can tell you anything, and you might make some serious mistakes.
Response number 2. Congratulations on taking the step. It's never too late to learn and take an interest in your finances. Educate yourself, and never forget that financial advisors get paid and make money because of you. They never lose. Read the book From Zero to Millionaire. It's a must-read, easy to read and reread. As for your question, I would definitely contribute to an RRSP. An accountant can help you determine the right amount, and you can also check your tax statement. There's a line that shows how much unused RRSP contribution room you have.
Response number 3. A capital gain is 50% taxable. So, for example, if you have a gain of $20,000, you'll be taxed on $10,000. That means your taxable income will be $112,000. Contributing around $4,000 to your RRSP to offset the capital gain would be a good option, to be adjusted based on your actual gain amount.